Greetings, everyone. Greetings from the Virgin Islands. I just got in today and it's Sunday, so I wanted to record this so that you all will have this first thing Monday morning so that you have time to do the activity during the week. The activity is going to be due on Sunday at 11:30, okay? I had posted some information in reference to part one assignment. Part one assignment is not going to be due today, Sunday, where I've sent an announcement out letting y'all know that it's going to be due on February 4th on the next Sunday coming at 11:30. Okay, so it will give you some time to get that done. That is going to be due. Part one is going to be due on Blackboard, and you're to post it on Blackboard in the area of My Family Project Part 1. So please make a note of that due date has changed to February 4th for Part 1. Quiz number 2 and discussion board 2. I'm taking a look at that now. I'm also looking at your self-introductions and your quiz 1 and discussion board 1. I'm going to have a response to those by the end of this week. As soon as that I can get those done. But what we're going to be working on this week is preparing your taxes. So we're looking at chapter 3. We're also looking at quiz number 3 and discussion board number 3 that is all due on the 4th, along with your part 1 assignment. So let's look at where we left off with chapter 2. Chapter 2 was basically about financial statements and plans. We looked at all the balance sheet, the different statements, the income statement. Now we're looking at preparing taxes. Taxes are based on your income. So we're going to be looking at income. We're also going to be looking at the fact that the taxes are part of a family's financial plan. So when you're looking at families and empowering them financially, you're looking at how their taxes can most benefit them. So when we're looking at preparing taxes, we're looking at the economics of income taxes. We're looking at how the federal income tax as well as the state income tax impacts you. As you know, in Texas, we don't pay state income taxes. So that's one kind of perk about living in Texas. When we look at the economy and we look at income taxes, we're looking at a type of tax that's levied on taxable income. So we have to distinguish what income looks like. There are various kinds of income. So when we look at income, first we have to look at how the family is going to file in terms of their status. We talked about family status in terms of what type of family you are going to be presenting in your family project. So your family introduction worksheet, you're going to use that to prepare the taxes for your family that you created. What we're going to be doing is looking at, as I said, the filing status. So there are actually 5 different filing status categories. You can find this on page 89 of your text. We have single taxpayers, married filing jointly, married filing separately, head of household, qualifying widow or widower with dependent child. So these are the 5 different filing status categories. You're going to need to know this in terms of the midterm, in terms of quizzes, and what they look like. What does a single taxpayer look like? It looks like an unmarried person or legally separated from their spouses by either a separation or final divorce decree. So when a person is single and they're a single taxpayer, they can be either unmarried or they could be married but they have separated. And they're divorced. So looking at the status, filing status is an important part of the preparing income taxes. We also look at what, like I said earlier, what does income look like? So we have various types of income, but before that, that take-home pay, when people say, oh, my take-home pay is XXX, Um, that take-home pay is basically, we look at it on page 89, we're looking at FICA and the establishment of that Federal Insurance Contributions Act, we call FICA or Social Security tax. It's explained on page 89, but to summarize it, it basically is approached in a way that we actually are required to pay taxes as we earn income throughout the year. So whatever you make, if you're sweeping leaves from somebody's yard, you have to pay taxes on that income. So that is important when looking at federal withholding taxes, which is deducted from your gross. So when we look at explaining what income is, we're looking at taxable income, and we're also looking at gross income. So in terms of defining the various types of income, taxable income is the amount of income subject to taxes, okay? It is calculated by subtracting adjustments, the larger of itemized or standard deductions and exemptions from gross income. So it's taking the amount of money you make and you're subtracting different things to say, okay, I needed X, Y, and Z in order for me to make this money. I needed training classes, or I needed supplies, or I needed, something in order for me to provide this, to have this income. So taxable income, there are deductions. There's standardized deductions where it's a one-figure deduction. Or you can do itemized, where you actually list different deductions and you subtract that from your income. Okay, and then that's what's taxed. Okay, so when we look at gross income, we're looking at basically all income subject to federal taxes. So here are some common forms of gross income. We have wages and salaries. We also have bonuses, commissions, and tips. So bonuses, commissions, and tips could be if you're a car salesman and you're selling cars, you get a percent of what the car was sold for, and that is your commission. You may also get a bonus at the end of the year. And if you're waiting tables, like I did, I waited tables when I was in high school, and I got tips. So those tips are taxed. You have to report that. The other type of gross income is interest and dividends received. Interest and dividends. Dividends is basically if you are a stockholder in a company, say you own AT&T stocks, you actually will be getting a check at the quarter, depending on how they do their reports. If it's a quarterly report, it's every 4 months, and it's what's reported, what the profit is, the shareholders get a check that is called a dividend. Also in gross income is alimony received. Say you were married and you got divorced, and your husband or your wife has to pay you a month money. This is not child support, this is alimony, where the husband or the wife pays either one every month, for them being in the marriage, or they lost income while they were married, etc. So that's what alimony does. Also, you may get gross income from a sale of assets. You may have sold a car. You may have sold your computer. You may have sold something, and that has to be reported. Also, you also may have income from pensions and annuities, and from rents and partnerships, or prizes, lotteries, or gambling winnings. So a lot of times people don't report that, but that is gross income that must be reported and is subject to federal taxes. And that's where people get into tax evasion in terms of not paying on the income that they get. It's unfortunate maybe, but the taxes that are taken from you from the work that you do and the income that you earn is used in the infrastructure of the society that you live in. So that's how it's basically justified. Now, there are three kinds of income. There could be active income, income earned on the job. There could be portfolio income, where you have, like I said, stocks, and you have a stock portfolio where you have how many stocks you have, what your dividends are, etc. There's also passive income, which is basically from real estate or from limited partnerships. Say you are a partner in a company, and that income is passive because it's not being generated on a continual basis. So those are the three kinds of income. When we look at the adjustments to the gross income, we're looking at basically allowable deductions from gross income, including certain employee, personnel, retirement, insurance, and support expenses. So you can have educator expenses, higher education tuition costs, and IRA contributions. Those can actually are some items that can be treated as adjustments to your income, where it is going to modify how your income looks because you're paying tuition. Okay, I'm a student, and I, have to adjust my gross income based on the fact that I have a high education tuition cost that I have to pay. When we look at the gross income and we look at sale from assets, we can also look at that as a capital gain, that you have gained some kind of some kind of money from that particular asset. So certain type of assets, as long as the holding period is more than 12 months, okay, which is when you're looking at capital tax rates, they're as low as 0% for low income levels or as high as 28% for higher income levels and certain types of assets, so long as the holding period, again, I said, is more than 12 months. Okay, and this is found on page 93. So I also mentioned deductions. They can be standard or they can be itemized. When we're looking at calculating and filing our taxes, we're looking at rates, and our status is what determines those rates. So if we're filing as a single person, there's a actual rate that we have to adhere to. Okay, if we're filing as a married but we're filing separately, there's a rate for that too. So there's rates and there's credits. You can get tax credits, and tax credits can be generated based on the fact that you have an exemption. And tax credit can be as follows. They can be either credit for the elderly or the disabled. They can be a foreign tax credit. They can be credit for prior year minimum tax. They can be a retirement savings credit or credit for qualified electric vehicle. There's also available for qualifying costs of adopting a child under age 18. And you can get an adoption tax credit of up to $13,190 is available for the qualifying costs of adopting a child. And that's why it's so important to adopt children, because number one, the children are benefiting from having a home. You're also benefiting from having that tax credit for adopting that child. So it's a win-win all the way. I would do it. I would adopt. I think that's a good thing for everybody. Now, when we look at tax forms and schedules, this is where your activity comes in. You're going to be looking at the tax form and the schedule. Now, on page 101, there's a worksheet, 3.1, and it's a 1040 EZ, okay? Now, in the activity, what I wanted you to do was to take your family introduction worksheet and create this worksheet. Now, you may not have wages, salaries, and tips, but you can find that based on your research of a salary that you were supposed to find of a career that you would want to do upon graduating from TWU. So you would need to use that information for this activity, okay, in terms of finding out what is the wages, salaries, and tips for your particular career that you want to be in. And they can be estimated figures. They can be figures that are based on actual data that you referenced in that first worksheet assignment. Or they can be based on actual figures. So when you're filling out that worksheet 3.1, it's one page. Okay? See what you come up with for that activity. So to end our session today, what I'm going to do, this is just a part of Chapter 3. I'm going to post another video to continue Chapter 3, and you have quiz for Chapter 3 and discussion board for Chapter 3. That's all due on the 4th. Okay? So I will talk to you all again soon, and do have a great rest of the week. Take care.